Last couple hours has seen the market going back on down. And it's not just the crypto market, it's the stock market. Because economic data is coming out that says, you know what, those rate hikes that we've all been seeing, they're working. And maybe they're working too much. We're also going to talk XRP price action along with the major crypto project rebranding. Seems to be the season for it, doesn't it? Bet you we're going to see a lot more rebranding. And New York State comes out with some new crypto regs. SEC, what's going on? Even the state of New York is making you look bad. You are the viewer, and the viewer matters most. That's why your comments come ahead of the news. Sam Blank 9667 says, is anyone surprised Gensler delayed? He's talking about the ETF ruling. No one was surprised. That's why the market didn't react to that news. Expectations versus reality. 2W134 drops another super chat on the channel. Thank you very much, sir. Says, very educational, dude. Love the show. If you love this show, you love the gold and silver one, which will I have at the end. Stackers, you're going to love it. Omni6757 says, in Scotland, we would call Gensler a baw bag. Now, I'm not from Scotland or across the pond, nor is my accent any good, but what is a baw bag? I mean, I know Gensler's a scumbag, a loser, a degenerate. I mean, we could go on and on, but baw bag, does that sum all of them up? Bitcoin's in at 36.42. We don't want her to go under 36, and that's what I've been watching recently. ETH under 2. Again, ETH can pull down the alts as well. Sol starting to feel the burn at 62. XRP going to talk about in the show at 61.8, with XLM right now at 11.8. It's not just cryptos, everyone. Dow down 120 points in the final hour of trading as the November rally kind of chills out. U.S. stocks were under pressure Thursday, but off of the lows in the final hour of trading as investors digested a batch of weaker economic data, suggesting the effects that the Federal Reserve's rate hikes have been kicking in. The strong rally for equities in November, which has taken the tech-heavy NASDAQ out of correction. And again, think of NASDAQ, right? Tech-heavy crypto we like following. There's some correlation there. Traders were focused on incoming economic data. Comments from Walmart Inc.'s chief executive officer about deflation likely to set in. That's not good. Cleveland Fed President Laura Mester also said, guess what, everyone? Monetary policy easing is not part of the conversation right now. Saying, hey, look, if we have to, we'll take a pause for a while. Now, a lot of us out there are starting to notice that these rate hikes are kicking in. We're seeing new car prices peel. Used car price bubble has already popped. Those are things tied to interest rates for loans and acquiring those things. The New York Department of Financial Services is setting the bar. Why are they setting the bar? Well, look, because they're updating their standards. They had crypto standards updated in 2020. They are now updating them yet again to meet the ever-evolving market. Now, isn't that crazy that Gensler can't do the same? According to official posts from the department, the new guidance is effective immediately and will replace the older standards in 2020. All virtual asset firms are expected to incorporate the latest standards into their coin listing and delisting policies by December 8th. Agency received submissions from several crypto entities, advisory firms, and industry groups, and the general public. The department also contacted industry firms to identify areas that require greater clarity. Holy crap! You mean you get to work with the industry and make it better instead of being the cop on the beat? Did you like that? I tried to be like Gary Gensler and say that cool, but I don't know if it worked. Think about that. They're getting comments from the public, comments from crypto enthusiasts, comments from crypto firms themselves saying, hey, tell us how we can help you. Tell us what is confusing and we will fix it. And they did. I'm telling you, everyone, in the United States, it may be a states' rights thing for crypto. Crypto may be just like cannabis, where federally you never can get both sides of the aisle to agree. But states' rights, we might be able to get it through. Due to the responses received, the New York Department of Financial Services included risk-based considerations, clear risk assessment standards, and tailored risk expectations for specific business crypto activities, and limited exceptions to advanced notification requirements for pressing circumstances. So they're working with these companies. They understand, hey, look, we need to make some changes here to make this work for everyone. Why? Because New York would love to give its citizens of that state, residents of that state, the best guidance that they can, the best regs that they can. Gary Gensler, SEC, take note. And as always, any article you see in this video along with all my other ones, will be linked in the What Everyone description below. Now, did you say that in your head or did you say it out loud? Crazy, crazy. Now, here is that from the New York Department of Financial Services. Rebranding. Now, Stellar rebranded some of their action, right? We saw that. We've seen Ripple rebrand their payment arm. Oh, interesting. What about DeFi lender Aave rebranding to Avara? Massive. Why? Because Aave, man, like big lending dollars there. But they're rebranding. I'm telling you, crypto, you're going to see a lot of rebranding. These companies out there that are able to pivot, that are able to make moves and give the consumers what they want are going to make it. Aave is a Finnish word that has a couple of meanings, including extensive, open, spacious, and inclusive. It also has colloquial use, which means seeing more than you see. Aave founder and CEO Stanley Kushlov claimed that these definitions inspired the choice of the name and the identity for the blockchain company. He stated that the growing offerings of Aave included Liquidity Protocol Aave, GHO stablecoin, Lens Protocol, Sonar, and it necessitated the change of the name to fit its wider Web3 appeal. Although the Liquidity Protocol will stick with the brand name through Aave Labs, its focus will still be on contributing technological advancements to the DeFi space. I like that. I like this move a lot. This is industry players and leaders out there saying, you know what? We can make this work. We got to make some changes. We got to be humble. We can't go as crazy as before. Maybe we can't sponsor every damn sports team and stadium out there. Okay, I get it. But we can make this work. The industry is starting to learn. I brought up the thing about the New York Department of Financial Services. Look, they're learning. They're like, hey, look, we got comments from a whole bunch of industry leaders. We got comments from a whole bunch of users. We see some problems. We can fix this. Aave is out there going, yo, we want to move. We want to make some money moves here. We got some dry powder ready to go. But you know what? We should rebrand and capitalize on that. This is good stuff, everyone. This kind of stuff has me happy. Now, I get it. When I zoom out, we look at the heat map, it's red. That's sadness. I get it, right? That's the storm cloud of life that like follows you and like it's raining on you and you're like, have you talked to your doctor about not feeling good today? Is the storm cloud of life following all around? And there's like the little like storm cloud and the guy's like all sad and he's kind of open arm. Like, I get that. That's looking at this. But when we start seeing New York State working with crypto companies, now remember, this is big. Why? PayPal, PYUSD, they said, feds, let's go the states route. And they got approved. See, states' rights versus federal rights. And the other good thing is these crypto companies out there, big ones, Aave is a big one, are like, yo, we can rebrand, we can do more, we can make it. I love that kind of stuff. All right, XRP, rest of the crypto market went down with the stocks. Why? Because there is some fear out there that these rate hikes might be a little too aggressive and that the effects are going to be lagging down the road. So even if Jerome Powell and the Fed, even if central banks across the globe, because remember, this week is big news. Eurozone, UK, a lot of CPI data. Even if they don't raise rates, the rates are still so crazy high right now relative to recent terms that the effects are going to still happen and get stronger and stronger and stronger. Used car market popped. That is tied very heavy into overpaid, overvalued used cars during a supply crunch during the pandemic, which led to used cars bumping up in price. Then what happened was you had high rates on top of that. People are like, yo, now there's new cars available. We don't have to pay as much as new cars and the loans are crazy. Oh, supply and demand. So now when we look at XRP and we apply supply and demand, we can see that near term. And I am talking the nearest of the near term. We've got support just above 60.5. All right. That's when you've seen the repeated low here on the 14th, as well as today, the 16th. All right. That is the significant mark. We're going to follow that along with Bitcoin and 36,000. Sol, I get it. Sol is going to erode. Why? Because it pumped crazy and people are like, look, there was no real freaking reason. Same thing with Matic. You're going to see some retraces. In my opinion, you're going to see some retraces. Why? Pumps and dumps. XRP, what's the story? Story is pretty simple. We got to wait for more good, real news to come out that gives us a reason to be bullish. Whether that news is BTC ETF actual approval, whether that news is a settlement and we get the court action over with, or whether there is something else, something extraneous out there that is good positive wise, right? Positively good for economies, global economies. New set of regs, maybe Gensler getting slapped on the wrist, a lot of stuff out there. But let's pay attention to this, because unless we do get something, we can breach 60. And then you know what happens, right? You know exactly what happens, right? I don't have to bring up what happened during the Taurus time when once we breached 60, right? But for fun, let's do it anyways, right? Tried how many times? And once we breach 60 right here, this move right here, this is what I was afraid of. I talked about it time and time again. You breach 60, you're in deep trouble. That's when that big candlestick happened right here on the 16th. Lost 20% that day, and then we were just pounding around right above 50. So let's watch this battle for 60 cents, and let's watch closely ETH, how much ETH retains of this last move, and if Bitcoin can stay above 36. So you're telling me that you can work with the state of New York, and the state of New York is like, yo, we understand this is new tech. We understand that businesses in our state are telling us, yo, we need some help with regs, and they're listening. Holy crap. Now, I get it. New York is not crypto friendly, right? We have problems with buying XRP in New York. You guys get my point. But it's the idea that they're working with them. They're talking to them, all right? If we're looking for victories in this space and in the crypto world, the victories we're looking at are about continuous improvement. And what I'm seeing from the state of New York, especially after they allowed and gave the old, right, thumbs up to PayPal's PYUSD, that tells me that there are states out there that are willing to work, even if the federal government isn't willing to work. Now, is states' rights a good thing? Well, I mean, it depends. Ask the Cannabis fans out there that have to deal with states' rights. Is that what you want for crypto? Is that the road we want to go down? I don't know. Some of us would say no, but some of us out there would be like, you know what? It's a place to start. And if we're going to get too much bickering from this side of the aisle and this side of the aisle, and they're not going to talk to each other, and they're not going to shake hands. I don't have like two right hands, so I can't like shake my own hand. So here, I'll do this. And they're going to shake hands to each other, right? I mean, then New York State is going to pick it up. Maybe other states pick it up. Maybe Texas starts rolling in. We've seen the Dakotas be friendly to the BTC miners, right? So we're seeing that states' rights thing evolve. Now, in terms of the economic data out there, let's just talk about this, okay? You raise rates, okay? Now, when you raise rates a ton, remember, this is happening global, so apply what I'm talking about now, not just the United States, but the entire globe. When you raise rates, okay, it only affects people that either have a variable rate or have to get a new loan or have to refinance at the time, right? If you have an existing loan, right? Like, so if you purchased a house in the last few years, you're not affected by high rates. Those people are probably going to chill out in their homes and be like, yeah, we don't want to sell because guess what? We don't want to then have to pay like 6-7% on our next home. They probably have loans right now at like 4%. So you've got that. You've also got people in the car market. Now, the car market's a little different, okay? People buy cars more often. Those people, right, the new people that have to buy cars, they're the ones in trouble. Prices are still fairly high, except in the used car market, you're starting to see it erode a little bit. But the interest rates are crazy high. That effect happens sooner, and it also happens over time, meaning the people that bought cars 5 years ago are going to be in season to buy it now, and so forth and so forth and so forth. The turnover on cars is faster and more aggressive than what you would see on homes, because not as many people buy homes every year. Credit cards, been following data on that. Rates, obviously going up. The amount of debt that we're seeing is going up as well, and it's increasing, and it's at a higher rate than we've seen pre-pandemic time. This is global too. So you have all these things going on, and what people are worried about is that these effects are going to keep going and going and going, and have such a negative effect that not only do we crush inflation, we crush the entire economy, and we just don't grow at all. That's where there's like this fine line, right? This fine line that we're all trying to walk. That's why all these reports that come out with CPI data, PPI data, UK, Eurozone, all the good stuff that we cover on this channel. That's why they're all important. Because it's all about taking all those different pieces, putting them all together into a ball that makes sense. One of the commenters out there said, you know what? No wonder Gary was going to deny the ETF. Yeah, we were all thinking it, right? And what happened to the market then? Nothing. When the announcement was made regarding the ETF, there was no market move because we were all like, yeah, we expected it. And that's why you gather all of this data, so that you could build your expectations and be realistic with them. so that you can be better informed without the emotions clouding your judgment. Now, what I want to share with you as we leave this video has to do with strength. Strength of economy, strength of market, strength of dollar, strength of currency. The strength part that we're going to be seeing here is going to be tested. It's going to be tested quite heavily in the fourth quarter results, which we're going to get in January, right? Think of retail consumer spending. That's going to be interesting. But it's also going to have like this delayed effect that you're going to see quarter after quarter after quarter. And we're going to see if the strength can keep up. Can the strength of these economies hold up on constant just rates, right? Just being just rough for a while. Is the strength there? The fortitude? That's going to determine if we come out of this with a soft landing or if economies just crush and crumble and we just don't grow at all for a while. And when we don't grow at all for a while, that's bad for tech stocks because that's based on growth. And it's also bad for crypto because crypto is based on growth. The more users, the more usage, the more people that get involved, more value action. That's why when you saw tons and tons of people involved in the crypto boom, 2020, 2021, price action was better. Now you see less people involved. There's not growth right now. We're in a decline phase. So let's pay attention to those macros and all the information that's coming up. Now, earlier in the video, I said, hey, gold and silver show, bet your butt. Well, guess what, everyone? We're talking Gorman cups. We're talking, specialty cutlery, juicy stuff. You want to check out the first ever gold and silver video and you want to be featured on that video? Check it out right here. You will not be disappointed. I'm going to be doing another one on Monday. Maybe it's heavy metal Mondays. Right now, though, it's recovery time, stretching, and chilling out the rest of the day. You cool cats, do the same.